Hey everyone. Happy day after election day. I don't know what they call that. Hopefully you got what you wanted
They
yesterday.
call
I
it
don't think
whinging.
very many people on this call did based on the polling that I did with Real Estate Magazine. I think there's a overwhelming support for conservative leadership in this election in the real estate industry. So I imagine our industry's not super thrilled with the outcome. It is kind of interesting. The uh the polling. I'm gonna publish a couple of these charts in the report today, but a lot of it, people actually felt that you'd get a better housing market, maybe not a better housing market, but better house pricing appreciation from a Carney um leadership than you would with Pierre, but that it would actually, that most people in our industry wanted a CPC leadership, simply because it was kind of the thing that they felt was better for the country. So I'm just gonna dive right into it today. As always, I typically preferential to having um, a conversation rather than a presentation. So if you have any questions, feel free to type them in the chat or put your hand up and we can call on you. And I have somebody from the team here who will let me know. We do have two things that I wanted to give you a heads up on today. Number one is we're having an event May 30th, so Friday, May 30th. It's going to be about AI and real estate, and we're going to talk a lot about strategies to succeed in the industry in a tough market. We're also going to talk about technology, obviously, as it's a big focus at our brokerage. We have some people from the tech space. We're going to announce quite a few more speakers between now and then, but this is literally the first time we've ever mentioned this. Like I just got the Eventbrite set up, so if you want to scan that QR code, if you're interested in early bird tickets, we have a limited amount of early bird tickets available, and then it goes up to full price after that. I think it's for 1 week. It's not expensive anyways. 25 bucks for early bird, 50 bucks for full price. We really just like people to pay to come to these things so they actually show up and are high intention people. We also have something called Agent Academy, which or AI Agent Academy. I don't know. We haven't really figured out how we're going to say that yet, but it's a school group with myself, Dave Hutch, and a couple of other members of the real estate industry, some from our brokerage, some from who are providing professional services to realtors. Similar thing. We're going to offer. We haven't even started it yet. It starts May 1st. So if you register before then, you get a super early bird. If you're a member of the Valery Real Estate Brokerage, you get access to the Agent Academy for free. So if you're interested in that, it'll be a lot of walkthroughs on like how I make these reports and a lot of like the simple automations that I use as a real estate professional to kind of refine like my data process, making charts, communicating things to clients, creating social media content, etc. That's kind of my piece of it. Dave's is a lot more really just like general things to help agents succeed. We have Mickey Furman, who's probably on the call as well. He's really good at like AI, like actual AI stuff. My automations are like, how to leave a uh ringless voicemail, or have your Facebook leads like auto text. These are things that I figured out like 5 or 10 years ago using Zapier. Obviously the space has changed a lot since then, so even I'm learning a lot from those kind of upper level automations that the other contributors are bringing to the table. I'll have those QR codes at the end as well if you're interested, or if you are, just maybe put it in the chat and I'll have somebody from the team just send you a link. Anyway, what we're going to go through today, number one is election outcomes and political consensus, because I think that there's something really worth considering with Canada's election that just happened, regardless of whether you got what you wanted or you didn't. I think we're kind of at the point where we have to move past that and think about what is this going to look like for the next maybe 2 years, if because it's a minority, maybe 4 years. And then that's kind of number two is what happens next in the economy that we're sitting with right now. And then finally, I'll wrap that up with the real estate market, and I'll take a look at the national level, and I'll take a look at a couple data points from the Toronto market as well. So um, just before the election, this headline came out, it said Canada is heading toward an election outcome not witnessed in generations, with current polls suggesting support for the Conservatives and Liberals, when combined, was likely to breach 80% of the vote in what many consider the most consequential election of their lifetime. that 80% number is important from my perspective. If you look at the vote share of liberal and conservative, I mean, we saw this whole thing really happened because of the NDP basically fell apart. And so you basically have 85%, if you really look at this, 85% of the population voting for just two parties. So we almost became a two-party system in this last election. And the reason that this is important is because over 80% of the Canadians voted for the CPC or the LPC. And, you know, a lot of critics during the election process talked about how Carney was stealing from Pierre's platform. And if that's true, then you would have to accept a few consensus issues that both parties arrived at. And I'm really only going to talk about housing related stuff and stuff related to the economy because I honestly don't know anything about anything else outside of that. The things that these two parties agreed on and that 80% of Canadians voted for a party that was talking about it. And when we talk about delivery on promises, it's obviously a much bigger discussion point, especially with the track record of the LPC. But building more houses. So building more houses was uh, Pierre's promise was 2.3 million homes over 5 years, and Carney's was up to 500K. Theirs was getting the government involved in housing, which is kind of its own thing. But this part's important because we need to be imagining we have a electorate that wants more supply, and so we're likely to see at least an effort made towards more supply. We heard about consensus between both parties on tax cuts, so income taxes being cut as well as GST on housing, and there was two different proposals in that regard. The other one was tax friendliness for real estate investors. So Carney proposed resurrecting the MERB program, multi-unit residential program, which allows real estate investors to actually tax deduct the depreciation of their multi-unit apartment buildings. So like if you buy an apartment building, you can, or buy or renovate an apartment building, you can actually tax deduct the capital cost allowance or the depreciation. Sorry, not capital cost allowance, the depreciation of that asset against your regular income in under the MERB program. The MERB program, ironically, was actually canned in like the 70s or 80s. It was really popular. It got a lot of apartment buildings built. If you've ever like clicked through Geo Warehouse to try and reach apartment building owners, you know, a lot of them are owned like just individually by like random like doctors or lawyers from the 70s and the 70s and 80s. And that's because of this program, because they could buy them and tax deduct it against their high income. It was abused like crazy, and so it got shut down. But that was what Carney's proposal was. Pierre had a similar one, which was comparable to the 1031 exchange in the US, which basically allowed or would allow you to sell a home. And this to me would have been really good to bring forward a lot of that boomer supply, where basically boomers, you know, hold I think 60+% of housing in Ontario or in Canada right now. 60+% of real estate investments actually in Canada. So, you know, you would incentivize them to sell, and then they could, without paying capital gains, go reinvest that money. And as long as it was reinvested in Canada, it would be allowed. The other piece was to streamline housing approvals, and then there was a lot of focus on first-time homebuyers and young people. And this is one of the interesting ones from my perspective, because I think when you talk about first-time homebuyers and young people, they were really something that stood out to me in the election. So first things first, from the Bank of Canada observes that first-time homebuyers are 50% of the market. So giving them an advantage could actually help resurrect the real estate market quite a bit. Whether or not we actually see that happen, it remains to be seen. But the challenge, and this came from Terranet, is that the average age of first-time homebuyers has shifted massively from like 30 years old to closer to 40 years old, sorry, for the median age. And that was in the last 10 years. So housing has become more and more unaffordable, and first-time homebuyers have to save longer and rent longer before they can afford to buy a house. And this is one of the big reasons why the real estate market has been slowing down so much. It's because the most prominent buyer, 50% of the market, has been kind of pushed out by unaffordability. So you know, you kind of look at, and a lot of people laugh at this, you know, the vote compass stuff. But if you really look at kind of like where the parties are no, or thought to have been seen, you're starting to see this like rightward shift. And again, I think most politicians, that you don't even have to name a party, will do anything to get elected and say anything to get elected. So it remains to be seen what actually ends up getting delivered. But there was this perceived, or they were running on this like rightward shift of the liberal platform. They were pulling a lot of things from the CPC platform to get people to vote for them in order to win the election. And that was fundamental in the Liberals even having a chance in this election. And this to me really stands out as this we're seeing this thing playing out called the political business cycle, which is basically where you have leftist politicians that create inflation through really aiming for full employment. So they really want to have create lots of jobs and be perceived as people who are creating employment. And then you have rightist politicians who are kind of brought in by the electorate to fix these problems. So inflation got out of control. We can't afford anything. Come in and fix this. Scale everything down, introduce some cuts, and that's this political business cycle that's been happening for a long time. It's visible in Canadian politics. If you look at interest rates and inflation, you can see these downward periods that are typically under conservative or more right-wing leadership, and then these upward periods where interest rates increase during more left-wing periods. And that cycle, save for a few kind of small blips where nobody was in power long enough for it to be meaningful, that cycle holds, and it's held through the last 10 years that we've had under Liberal leadership, where we've seen a general increase in inflation. And so if the platform and if the promises are to be believed, you would imagine that the electorate basically is communicating to politicians that we want lower inflation, we want prices to come down. And what would that mean if that actually took place? And I don't know whether or not it's going to, and we'll get to that a little bit further, because Carney has talked a lot about spending a lot of money, and spending money can be inflationary. But if we were to end up with that, if the electorate got what they wanted by getting a disinflationary outcome from the election, we would see lower inflation. That would lead to lower interest rates. That would lead to improved housing affordability, which would lead to more transactions, and that would lead to more income for our industry and more housing GDP. And so we know now that the Liberal minority is the most likely outcome of the election. And we saw kind of the way that seats got shifted around. This chart's really interesting from my perspective when you think about like the way that the vote was decided. I think most people on this call are below the age of 60, and so that might also explain where our political leanings are. But when you look at people below the age of 45, the most important, actually pretty much everybody except for the 60 plus, the most important issues for this election were reducing your cost of living and making housing more affordable. And if you look at 60 plus, their most important issue is dealing with Donald Trump. And so this is, from my perspective, this big growing, a lot of people talk about like divisiveness and this and that in politics. And I think that there are a lot of these imagined kind of like groups of people that are being split up. But really, this to me is the best illustration of the divide in the economy is what voters are prioritizing. The least important thing to voters 60 plus was making Canada a better place to live. And so if you look forward, you know, this checks out to me because Canada's a pretty good place to live for those who are 60 plus. But if you look forward, the voter intention for your younger voters was skewing more towards conservative, and that is pushed even further into the future by this kind of this thing that's done by Civex, which is a student vote. They have like 900,000 students vote as if they were voting in the election, and the Conservative Party would have won the election had it been decided by people who were under the age of 18. So this is fascinating from my perspective because, historically you've got this timeline where, we have kind of gotten rid of the two-party system, and you started to see competitors like the NDP arrive and really play a bigger role. And I think we're likely going to see this kind of like long-term trend of conservatism based on what the existing youth vote is doing, plus the future youth vote is doing. and that would be in Canada's politics moving forward. Let's actually talk about the outcome of the election. So all parties really ran on a platform of spending more money. Even Pierre's platform proposed spending more money than Trudeau did the year prior. Obviously, Carney's platform proposed a lot more expenditure, with most of it concentrated in 25, 26. The biggest thing that stands out to me here is that all politicians are forecasting a pretty big economic problem this year and next year. That's typically what requires spending to get, to keep the economy moving, to create jobs, to build infrastructure, et cetera. The LPC did release this kind of like platform spending diagram that showed how a lot of it was to be spent on capital rather than operating budget, which would mean that these are things that should be spent on infrastructure, which is that's stuff that's good for the real estate industry. So you can probably expect, again, if Toronto gets a high quality subway system, or we get better regional rail, or we get these railway networks that are going from city to city. I mean, these are all things that would tangibly affect our industry. You hear this word a lot from Carney, the build word. And this is an interesting one from my perspective, because I think in a lot of, historically, we want to think about building as like the potential to overbuild, right? And how if we build too many houses, then prices are going to go down and we'll have excess supply. But the reality is, if you look at the the areas in North America where we've seen the most construction, we've also seen the most growth in house prices. And this is an important thing when you think about that word build. And again, like the politics aside, we have an election outcome now. If we're going to actually see build, and we're going to see more construction and more infrastructure and more of all of these things, what that typically means is that like capital goes where where there's growth. And so if we're seeing cities like Toronto continue to build and infrastructure continue to grow, and all of these different areas, you're gonna get probably a balanced outcome where you get kind of a predictable house price growth. You'll see growth, but not the kind of runaway growth. And I'll get to that in a second, like we saw during the pandemic era, et cetera. But you'll also get economic growth. And so this is an outcome that we should maybe be hopeful for. Before we get like, too far into the weeds on politics, I just thought this was kind of interesting that, a lot of business leaders, CEOs really don't care that much about politics. And so I'm really excited the election's over and I don't have to talk about this anymore. This will probably be the last discussion that I have on politics, which is very fortunate because it's been honestly exhausting. I'm sure most of you are privy to my Instagram comments. I'm basically just getting yelled at all the time. So, anyway, CEOs rarely attribute their success to politics, right? And I think that democracy is interesting in such that it gives people this like excuse to not be accountable. Like you can blame, your politician or the electorate or whatever. But the reality is, I mean, like we're really in control of a lot of the outcomes here. And so I will leave it with that, and we'll get to the housing market, which is not good. We have the highest remaining inventory in. Oh, is there any questions or anything from there, or is just okay, cool. That's it. Yeah, so remaining inventory in the pre-con market, it's creeping up. It's not absolutely nuts levels, but it's higher than what I would say most market participants would want to see it. This is stuff that's going to end up like really trickling into the market. It's going to have continued downward pressure on prices. That'll make housing more affordable. This will help us to get deals done as buyers start to re-enter the market. And we ran a survey, something like over 60% of buyers and sellers had kind of put their decision on hold to wait to see the election outcome. And so I would imagine we've gotten rid of one of the key question marks. So we have question mark number one, which was the Canadian election. Question mark number two is what's going to be done with the trade war. I think now that you have a government with a mandate, they'll start moving on that. Hopefully we'll see, some sort of news around that'll allow people to say, okay, I can buy a house with confidence. I'm not fearful that I'm going to lose my job, or, whatever it is. That I think, we kind of postponed our spring market. I don't think we'll pull forward a lot of the demand. I think it'll kind of be soft into the summer, and then we might see a bit of a stronger fall market than we typically would. Yeah. Yeah, I would say like you're typically seeing most of these trends across Ontario. I don't have specific data on the Ottawa market, but I do have nationwide data. I would say the Ottawa market's kind of interesting in such that it corrected a lot more quickly and violently and seems to be kind of finding a bottom a little bit quicker. I would imagine now that you've got a continued LPC, you're going to see not not as much fear of government job loss. So it could be a bit of a stronger market than some of the others. Um, the condo side, same thing. We've got a ton of remaining inventory, and that's with construction starts as well. So this is so pre-construction, you've got 9,000. Under construction, you've got about 6,000 right now. And then standing inventory, you've got about 1,100. And then the new home sales that we've seen. So 2024 was a bad year. I think it was the worst year since the 90s. 2025 so far is shaping up to be worse, which is I'm actually shocked by, to be honest. It's like 50% worse than last year, year to date. So if you just look at the number of homes that sold in 2024 for the first um, quarter, we're now 50% of that for new homes. So all of this to say that you're going to start seeing this like kind of tapering down of future new supply. You've got record supply happening. This is Altus's look at it, but we combined Altus forecast and Zonda's forecast to come up with um, this kind of like supply thing. So when we talk about the like politicians wanting to like create supply, and this is really just because this is really the only place where we have the data is the GTA. You see 2024, we've got record deliveries, 2025, we've got record deliveries. So this is going to have continued downward pressure on prices. 2026, you've got a huge drop off in deliveries. So if and by 2028, 2029, you've basically got like none. And so if we see immigration continue, like sustain at its current rate, the immigration side, the PR, permanent residents, people actually like becoming permanent residents of Canada, nobody really proposed to touch that. It was more the temporary foreign worker program was kind of under fire from both sides. But if we see Canada's population growth continue um, at the rate that it has, we will need more units in the fullness of time. And if we don't have them, like just assuming that this is some example, and CMHC's housing supply forecasts are similar. I presented them in the last month's call, so I'm not going to redo it, but they basically look the same as this, just at a national level. We'll need to backfill some of this supply that the private sector isn't building. And not to say that the government should be building houses, because I'm actually not in favor of that at all. But this is what both parties are talking about, is the gap here between this 18,000 and the 38 or 40,000 homes that we want to be creating. Um, so there's two potential outcomes. Do we think that they're capable of bringing that many homes to the market? I don't know. Probably not as many as they're saying. They typically aim high on their targets. Um, do we think that they're bringing some meaningful increase in supply to the market? Yeah, probably. So you kind of have to like place your bets on what number do I think that that's going to be and where do I think it's going to take place. It's a lot harder for the government to build supply in Toronto than it is in, some random places where they can get land for next to nothing. And you don't really have to be an expert builder or expert market participant to try and be competitive. So this part's fascinating from my perspective. I think another big piece of it is they're going to continue ramping up the CMHC MLI Select program and trying to use government insured debt to get a lot more housing built. So this is really this new unit pipeline forecast is it could either end up being a huge supply gap that would drive prices up later, not today, but maybe in your 27, 28. This could really assist in your recovery scenario if we can't backfill a lot of that supply. But if we can, if they're successful in meeting the targets that they've set out, then we probably will just see a market where you've kind of got like 5 or 10 years with very little price growth, which we've seen it so far. We're already kind of like 3 years into it. And I said that as soon as prices dropped, I said it's going to be flat for like 5 years. And it's proven to be pretty much that. Um, can that continue for another 5 years? It's really up to policymakers at this point. Yeah. Um, yeah, it's a combination of forecasts from Altus and Zonda. So I mean, I don't know, it's as accurate as you're gonna get. Yeah.
People just want to know if you know anyone with this information from Alberta or Canada?
So in Quebec and Alberta, you can get this info from CMHC. You know what I'll do is I'll just make a note to add it to my next month's call. And so if you can attend, or just if you want to maybe just like private message them my email, and I can just email them the link to it. But yeah, CMHC has these forecasts for the other markets outside of Ontario. Um, so that was the pre-con side. On the resale side, we're seeing the same thing happening. You're seeing a continued piling up of resale inventory, and there was a period of time when both rental and resale was climbing. And now you're starting to see, I think, a lot more people realizing that it's not worth trying their hand in the rental market, and they're actually just going to relist this. And so you're seeing um, the resale market really piling up in inventory. This is good. This presents a good opportunity if you're representing buyers, which I think the majority of people tend to do. Like, usually as agents skew younger, we typically are going to be representing first-time home buyers or whatever it is. This is like a buyer's market. Statistically, there are a couple things missing to make it a true buyer's market, but the reality is if you have thousands of listings to look at and thousands of sellers to negotiate with, you really do have a buyer's market. The new home benchmark price as a result has really kind of followed the price trend down, where we're seeing your single family detached is down significantly, like almost 25% off peak, and the condo is down about 10 to 15% off peak. So we are seeing some price correction in the new home. This kind of fell out of place where it was, but it was supposed to be earlier in the presentation with the politics stuff. But this was just interesting from my perspective. The the survey that we ran with REM, with Real Estate Magazine, they polled 675 realtors. Some of you on the call might have answered it, but the question was, who do you think would be most likely to make house prices to rise? And 38% said Mark Carney. So, maybe that's the outcome that you should be expecting from the election. Vast majority felt that Pierre Poilievre would be a better leader for the real estate industry in Canada. But that the liberal housing plan appealed equally to the conservative. This conservative one should actually be above that. There was something wrong with what happened with the survey. But the interesting part on the house price growth is that if you look at the last two prime ministers, the house price growth was very comparable. And if you look at it a lot of people say, oh, with Harper, it started from a lower base. So, if it was 200K and it only went up 100K, then that's not as bad, but it is because it's relative, right? But the part from my perspective is that if you look at that the Harper era, it was a lot more of a consistent line, whereas we saw a lot of volatility during uh, in house prices during Trudeau's leadership, and a lot of that is COVID and people there was, well, the central bank side as well, record low interest rates, and then you saw a lot of people moving out of the cities, so that put a lot of pressure on different markets. So there was definitely a lot of volatility, and so the question is, do you want more of this consistent straight line, or do you want the volatility? I know a lot of agents really enjoyed the volatility, probably made a lot of money off that volatility in your kind of 2021 market. The other interesting part, though, is on the rent price growth side, which was far more severe under Liberal leadership, which is, I mean, I think this one, it's not really even a political comment. It's probably just visible from a policy perspective. You saw the Bank of Canada in their monetary policy report. They put in this chart that showed population growth beside rent price inflation, and like their correlation is like unignorable. And the Trudeau government did really push this temporary foreign worker program, which again, like these through temporary foreign workers, non-permanent residents, international students, etc. These folks are they're by nature not intending to live here forever, like temporary foreign worker, non-permanent residents, students, etc. So they don't buy a house, so they rent, and so they put a lot of pressure on rents, and that actually helped push house prices up for a period of time. Now that's recoiling, and this is why we're seeing rents falling quite a bit, which I'll get to in a second. Quick jump to the Bank of Canada's reports. Then these are a lot of the headwinds that we're going to continue seeing now that the election uncertainty is over. You're kind of going to move to the next question mark of uncertainty, which is how's the job market? Is there any questions I need to get to or no? No? Okay. So, this is the highest, consumers are more worried than ever about the probability of losing their job. So if you look at this blue bar here, probability of losing their job is the biggest it's ever been. And we're seeing wage growth continuing to moderate, which means that typically wage growth, if wages are going up, they can improve housing affordability. That's not going to be happening right now. So interest rates and house prices are going to have to be the two bigger contributors to housing affordability improving. And wage growth had done quite a bit of the work over the last couple of years. Interest rates obviously did a lot, and house prices did a little bit. But wage growth won't be able to be continue to help it make housing more affordable for people, simply because we're in a tough employment market, and jobs are hard to come by, and so wages typically don't grow. The share of consumers who plan to reduce spending has increased substantially, and consumers at large are expecting their financial health to worsen. So this isn't really the making of a good real estate economy. Interestingly, inflation without shelter services has returned to close to the historical norm. The part that stands out to me here is if you look at shelter services on the right-hand side, they have rent and mortgage interest costs as big contributors to inflation, but rents are actually and have been falling for like 6 months. So rents will be disinflationary once the Bank of Canada's CPI actually picks that up, which is in another 6 months. So, they should actually be deflationary. So that should actually cause shelter inflation to come down quite a bit. Mortgage interest costs, a lot of it is really just getting past that renewal wall that we're hearing about. Once you've had more people renew, then the time just needs to elapse for that to show up as a decrease or disinflation. The stat on rents, your annual change in average asking rent for all property types in Canada is down for the last 6 months. I think 1, 2, 3, 4, 5, 6. Yeah. So been trending down. For this data, I would check either live.rent. You just type that in your browser. They have some really good monthly reports, as well as rentals.ca. This is a city by city breakdown. So you've seen them increasing in Ottawa. I know somebody mentioned the Ottawa market, and in Edmonton, down pretty much everywhere else. Inflation has risen a little bit, and short-term inflation expectations have increased. So the Bank of Canada will be pretty careful to temper that inflation expectation. The part that really stood out to me about the Bank of Canada's most recent monetary policy report was that they kind of have their eye off the ball with the housing market. So I went back and I looked at the past, I don't know, like 20 something monetary policy reports, and the number of times they mentioned housing. And the last time they mentioned housing this few times was in April of 2020, the lockdown, when obviously they had a lot more things to be thinking about than housing. But since then, the housing market has been pretty popular mention, and now they only mentioned it 2 times in the last report. The report was very much about dealing with the trade war and just policy with the U.S. Another survey from the Bank of Canada with mortgage lenders, they feel that so you can see a pretty big drop off in household lending conditions for mortgage lending, the blue line here. Non-mortgage lending seems to be not improving, but yeah, we're way off peak from a mortgage lending perspective, and continuing to trend down, which shows up in the data of again, the market, just not a lot of transactions happening.
And they email you?
Yeah, for sure. You can just put my Valery email in there. The residential sales activity is the lowest that we've seen since Q4 2023, which was kind of like I don't know, that was, and I guess that whole period, like you saw that couple of quarters, 22, 20, the second half of 22 and the first half of 23, when, rates had, the rate hiking cycle had started, rates had come up, prices had come down. People really weren't in a hurry to make decisions. It seems to be the same thing, but the bigger difference here is that at that period of time, sellers weren't really in a hurry to make decisions. It seems like in 2025, we are seeing a big increase in sellers. We've actually seen the highest number of supply since Q3 2020. So this has put us in a point where at a national level, based on a sales to new listings ratio, we're basically in a buyer's market. Months of inventory, similar scenario. We're climbing back to basically the highest months of inventory we've seen since that kind of pulled forward period of COVID, where we had the months of inventory got skewed high because nobody was buying, but all the houses were still sitting on the market. So that months of inventory is basically um, I would say, like, carve out those two outlier data points, probably the highest we've seen in decades. And relative to sales to new listings ratio, again, the lowest that we've seen in decades. So we're not seeing a lot of absorption relative to listings. It's a pretty strong buyer's market position. This is, again, if you're representing buyers, it's a good thing. You show them this chart and say, let's get out in the market. If you're representing sellers, it's a little bit more difficult. Sellers are really the ones competing for the bids now. This is just visualizing the monthly home sales relative to the 10-year average. So you can see we're well below the 10-year average. So I would say the real estate industry is firmly kind of like back in recession territory, where we spent this long period of time below the 10-year average. We're back there. You really got to fight for deals in this market, and I think most people are aware of that, and I think that probably this is a good thing for the industry in the fullness of time, where you're going to get a lot of I think there was a stat that I heard recently, like 70% of agents didn't do a single deal last year. I think a lot of those agents are going to, I guess you call it like a weeding out, and that will probably make a healthier market for both professionals and consumers on the tail end of this, but it will be a kind of rough period in the interim until we get there. If you go back to house prices, um, as I mentioned, you can kind of see as we came off the top, the market's really just traded sideways since then. And you could see the same thing happen in 2017 and the same thing happen in the 90s. Usually when you see this big correction, the market's really not in a hurry to go and recover all of those gains, because most people would associate that kind of like that really like crazy exuberant period with being a bad thing, not a good thing. And so, if you look at the HPI, it's actually like very much just sideways, almost flatlined. Seems to be trending down a little bit, and I would expect that trend will probably hold for most of the year. And this is all national, by the way. Just a quick one on the Toronto market, because I know I have people from all over the country, so I'm not going to belabor the Toronto market. I think I only have 3 charts on it, but from a supply side, number of active listings is comparable to like a 2015 or a 2014 market. So for those of you that were trading then, that's pretty much what we're looking at from a supply perspective. From an active listings perspective, we just do have quite a few less transactions, but we're way higher than your 2025, 2024 markets that I think most people are kind of used to over the last couple of years. And I would expect that we'll probably see this supply trend continue with active listings sitting quite a bit higher. This is a good thing. Yeah, go ahead. Yeah, I would say that's why it's a buyer's market. Like, I mean, the buyer's market is so sorry, the question was, is a buyer's market given that it's so difficult for buyers to get financing? Like that's why, right? Because you're not competing with buyer's market. The market balance between buyers and sellers exists outside of whatever lenders are doing. So just because you can't get financing, that's what makes it easy for the couple of buyers who can get financing to be successful, because they're not competing with a ton of other buyers. So I think buyers who can really push to get in the market can be rewarded by really negotiating good deals. It's not to say that, like, and a lot of people really think about the market and like market timing as like, oh, I have to buy when house prices have hit the bottom. It's like, well, not really, because you're not buying the average price. Like, it's not like a stock where you have to pay market price for the product. You can go negotiate a 10% or 20% discount. And so yeah, I'd say it is that would make me feel like it more like it's a buyer's market. It's just unfortunately that it's a buyer's market with no buyers, but that's kind of a hallmark of a buyer's market, right? Is that it favors the buyers who are able to participate. There just aren't very many buyers who are able to participate. Sales volume is bad. Sales volume is basically, and this is in Toronto, similar to what I had mentioned with the national statistics, but basically the lowest week that we've seen. So this is weekly sales volume, but the lowest week that we've seen in the last decade, other than because the week that just passed, like that I have the data for, was the actual like bottom lockdown week. Other than that week. So again, carving out that bad data point, it was like the worst week so far. Price seems to be, it's kind of flat, but it is trending below even your 2021 levels on an average price. And so again, we've erased basically, you can see here like 3 years, 4 years of price gains, and we're kind of back to your 2021 levels. Not not your 2020, obviously. And I don't know if we'll get there. Maybe towards the end of the year, I think you'll see these lines get a little bit closer. That's it for today. Only burned up 40 minutes of your time. I'm happy to do some Q&A. And again, I would encourage all of you to register for our event. I'm going to be doing a market update, like a full kind of like spring market update at the event, as well as we'll have some panels from some cool agents like Madeline Towns, Brooke Hicks, Dave Hutch, as well as some tech providers. We have Roz from Mave. There's another guy that's going to be joining us that sold an AI company. Shamir from Valery is going to be talking about AI for realtors. So I think it'll be really beneficial if you're a real estate professional. I'd love to see you there. My big thing is like I would encourage you to get a ticket ASAP because it's a small space. We want it to be small and intimate because there's going to be like a lot of discussion as part of the event. So don't wait because it'll definitely sell out. And then also check out our Agent Academy if you want to learn again how I do my market reports like this, how I get 70 to 100 people on all of them, how I make social media content using data, etc. I'd be happy to teach you that in that environment. I think it's right now it's super early bird because again it doesn't start for 2 days, but I think the first 50 people can walk in at I think it's like 47 USD a month. So scan that to check it out, and hope to see y'all in there. Happy to do some Q&A now. Yeah.
Do you feel that sellers should hold off till fall?
I don't really see the harm in waiting. Or sorry, I don't really see the harm in trying now. Like I think that I mean, I guess it would suck for the agent to have to list it twice and kind of like go through that program. But I mean, like if you're just gonna have a property just sit on the market and try and catch a bid, like I'm going through this right now with a power of sale where, the second lender, so the tenants haven't left yet and they don't know if they want to list it, but we have to list it this to kind of at the price to try and protect the second lender, so the lender in second position, and it's just gonna sit on the market for like 60 days when we have it listed at that price because it's not a reasonable price. There's too much debt on the property. And so it's like you might as well just do that now and then kind of like get that waiting out of the way and let the sellers get some feedback, let them get some showings, find out whether or not the markets will, kind of priced where they are. Like I don't see an issue in trying to catch the spring market. We will see buyers who want to buy houses today. I mean, I think your entry level market's been pretty strong. Like your first time home buyer stuff, we're still hearing about like bidding wars for properties under like a million bucks. So it would really be product specific, but my advice is like we're in such a slow market that like time on the market is really going to be advantageous. So I don't think there's an advantage to waiting, but I also don't think that there's like a disadvantage to listing today. So I would probably just test it now. If it's no good, take it off the market for the summer and then relist it. Like I don't think it um compromises the integrity of the listing to have it listed twice, but maybe other people on the call would have a different opinion on that. Any other questions?
Uh, Agent first time. Mm.
Yeah, I can pull that up. Um, this one, is there a question on it or he just wants to see it? Yeah, true. There you go. You can find this in a Globe and Mail article as well. And that Terranet, I don't know if you those of you who subscribe to Terranet's updates, they sent out like the whole data set in an email. That's just a Terranet's geo warehouse. So any other questions?
Just a comment.
Uh,
Oh, would you have any stats other than nowhere to HGG stats on homes sold in the market under 1.5 versus no less
yeah, you can get so the question is like trying to basically like pull the market, split the market into like upper and lower tiers. You can do that on the Habistat. So if you go to the habistat.com, it's like included in your Treb membership if you're a Treb member, as well as like other boards that are on PropTX. So like I think Ottawa's on that as well. But you can actually go to I think in the fourth page, you can split the market into quartiles and see like what percentage of homes sold for Melissa. I'll you'll get an email to an invitation to register for the Agent Academy on School for free. Is there an actual supply shortage or just misplaced supply? Boomers will be dropping off sooner rather than later. I mean, it's a good point, I would say. You know, I think that you have the largest square footage per capita in the third largest in the world, I think. So, you know, between Canada, the US, and Australia, I think. So yeah, like, you know, it really depends on whether or not the next generation of homeowners wants homes the same size as boomers. But I think the policy environment is making it pretty clear that, you know, they intend to cut those up, whether it's cutting one piece of land into a fourplex, like 4 units, or cutting one of these McMansions into 4 units by just like, you know, adding fire separation or whatever. That's the direction the policy environment's going. And the easiest way to think about that is like we hear a lot about GDP per capita falling, right? So, what's the biggest thing that people spend their money on in Canada is housing. And so, what's going to shrink the most when you see GDP per capita decline is the square footage that individuals consume. So, they're going to be living in smaller houses, they're going to be renting cheaper houses. And a lot of that really just alludes to unfortunately, like I would say, unfortunately, an erosion of the quality of shelter that we consume in Canada. So it's very easy to see what this looks like if you just go back 100 years and look at London in like the early 1800s. So London in the early 1800s, um, they had, you know, everybody in the world wanted to move there, similar to what the position that Canada was in. Um, you know, they could because they didn't have to take a ship or a plane to get there. They could, you know, just migrate along land or across the Mediterranean. And so London grew like it was like 7 million people. That's the same population now as it was then. And what happened was all of these flats or all of these row houses got cut up into what are now known as flats, right? That's what's going to happen, you know, unless policymakers can come up with some brilliant idea to actually build 500K houses a year, which I just don't see happening. That's the most likely outcome for a place like Toronto. You'll see it incrementally in other places across Canada. But I don't, I think that that's kind of my way of answering that question. Is there an actual supply shortage? Maybe, yeah, I guess on a number of units basis. Is there a supply shortage on a square footage basis? No, and it seems like policymakers are determined to try and figure out a way to make that match by like making investors cut houses up into multiple units. Do I think now that elections are over, some buyers will have the confidence to come back, or do you think they'll wait to see what happens the next 60 days, et cetera? I think you'll start seeing people come back for sure. A lot of people did delay just to see the result of the election. I think people want some sort of certainty, and there were probably like two kind of potential outcomes of or paths that we could have gone after this election, and so the path is a little bit more certain. I think you're also like more likely to arrive at a conclusion with the trade war and with Trump sooner than later, whether for better or worse as well. I think that, you know, that some of the other themes that you get a little bit more uncertainty that starts getting injected that might delay that again is, you know, is Alberta going to make an attempt for succession, et cetera, right? And I think like these are new things that actually become other issues. So I would say like we've got like at least 2 years of uncertainty ahead of us, probably four, given like, you know, that's how long the Trump presidency is going to be. That's how long we just likely elected our leadership for. And so, I mean, this is a really crazy time to be a professional. I think that you kind of want to really focus on the things that we can control for our clients, and like eh, I think the whole political sphere is outside of that. The one big challenge with that that's going to be prohibitive for buyers is if our economy is bad enough that they're at risk of losing a job. And so that's kind of like the bigger discussion, right? Is like, are we confident that we're going to be able to have a job, pay our mortgage, for because employment's still that line that's going up. That's the highest risk factor for most buyers right now. Um, Frank, I agree. It will take a really long time to convert all of those units over. Melissa, I had a client text me after the election that now wants to move forward and sell two investment properties, doesn't want to hold them for the next 5 years to flatline. A good way for us to approach our investor clients now with this data. I would agree. I think that like you've got like there's a lot of themes that people associate with the Liberal Party victory. That there's this perceived threat of capital gains on increasing capital gains inclusion rate, which we already saw, and then it kind of got walked back. There's this threat of capital gains on the primary residence. Again, don't know whether or not these things are credible, but these are things that are in the mind of the sellers. And so people who didn't get their election, I mean, like Canada is obviously quite divided. There's a lot of consensus issues that I mentioned early in the call to make it easy for me to talk about politics. But the other piece is that Canada is very divided, and there are a lot of sellers who are not happy with the election outcome, that want to move their capital out of Canada, et cetera. And there's just as many who want to double down, right? And so there are ways that you can capitalize on those market shifts, which happen as a result of just purely political changes, to create opportunity for us in the market right now. Do I see immigration targets changing? Probably not. If anything, I would see them change to the downside. I think that they already had been moved down. I mean, unless we can really ramp up the infrastructure to meet the demand, I can't see them fumbling the ball on that again. Um, yeah, I mean, the couple of times I saw Carney questioned on it, it seemed like he was in agreement that they really dropped the ball on that program, and they don't intend to do that again. It's just such an easy um, issue for both parties to create a wedge out of, like both the NDP, who they're going to be relying on for support, and the CPC. So I feel like it's a bit of a careful one that they'll probably tread pretty carefully on. Plus, I mean, I think we're all just accept the interesting part is they now have like somebody to blame for Canada's bad economic growth in Trump. And so they can let immigration fall. Like, I mean, those of us who know Canada was already on a pretty bad downtrend from an economic perspective. But now they don't care to, they got their mandate, right? They won the election, and they don't care to stop it from happening by using immigration as a kind of a crutch to prop up GDP, because they can blame Trump on they can blame any economic contraction on Trump, whether that's real or not. I think a portion of it will probably come from that. Um, okay. Any other questions? I guess that's it. Thank you, everyone. Hope to see you guys in the community at the event, etc. Really, I really enjoy these calls, and I appreciate everybody coming out. As always, feel free to like DM me on Instagram or email me or whatever feedback from the call, questions, charts, data you want me to cover next time. And with that, I guess I'll either see you on the 30th, or I'll see you in the community, or I'll see you next month on this call. So thanks.